Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. Today I'm looking at yellow cake. Now these are listed on AIM as YCA.L, but actually investing in these, you're not really investing in a stock, you're investing in a commodity. You're investing in the spot price of uranium because yellow cake, quite simply, the majority of the assets are in yellow cake or uranium oxide, which is this yellow powder you see in these barrels. And really, they just store large amounts of yellow cake, so that their share price should just reflect the uranium spot price. So I'm looking at these as a way to directly invest into the uranium spot price so that I'm basically got in my overall portfolio some uranium commodity, and so I'm not really including this in my equity investments. So the model for yellow cake is very simple. They have a 10-year supply contract with the largest uranium miner, and that's Kazatomprom, based in Kazakhstan. And then this allows them to buy uranium at spot price over the next 10 years. And then they have storage facilities in Malvisi in France and at Blind River in Canada. So they really are as simple as they buy a load of uranium and then store it, and then the value of their share price should reflect the uranium spot price. You can see that in 2018 they IPO'd. They bought a load of uranium and then they've just stored it by and large. And currently now their uranium oxide assets are up from 241 million to 277 million. And the uranium oxide spot price is actually about the same as it was in 2018. Now I'm going to go in a bit more detail into the bull case for uranium as advertised by Yellow Cake and all of the other pundits for uranium. Here you can see the spot price of uranium, and you can see that in the past, when there was a bit of a supply crunch, the spot price of uranium did seriously increase from well below 20 to $140. And a lot of the advocates for investing into the uranium commodity are saying that we're now on the cusp of another supply crunch and another jump in price. Now, there have been a number of highly enthusiastic, if a little bit niche, proponents for investing in uranium that you will find when you start searching for this. They all have a similar theme, and this is also obviously in the latest Yellow Cake presentation. The uranium bull case, it starts off with an explanation that that there is going to be increasing demand for uranium in the coming years. China, India, and Russia are building an increasing number of nuclear reactors, and you can see the world nuclear fleet. It's currently about 441, and there's more being made and more plans. And China specifically are boosting their fleet considerably, with 48 operating reactors, but another 56 in the medium-term pipeline. So here we have the Yellow Cake investor presentation, which you can get off their website. And then the other big argument is that at the current price of uranium, most of the miners are losing money. So actually, you can see this better on this slide I picked up from a Kazatomprom investor report, and the spot price of uranium. So currently, the uranium spot price is around $30, and at this price, half of the uranium miners aren't making any money. They basically lose money if they mine uranium. And so this is why there's been loads of underinvestment in uranium mining now for many years. Because of this, there's less uranium being mined, and so this is what creates a supply crunch. The spot price of uranium would have to be 40 US dollars, which is a 25% boost to what it is now, for three-quarters of the miners to be profitable, and it would have to be 50 US dollars for most of the miners to be profitable. So that's obviously a central plank to these advocates of investing in uranium. And there have been supply cuts in the mining of uranium. And we see it has actually dropped quite considerably in 2020. And actually, they used COVID as a handy excuse to seriously shut down their plants. But I think the way I've read into it from looking at them, this is Kazatomprom and some of the other miners. I feel like they've been deliberately cutting their supply in order to raise the price, which is, quite justifiable, really, because at current prices they're going to go out of business. You see, and this is from the Yellowcake investor presentation, but there's this argument that in the long run, the demand for uranium is only going to increase, and yet there's this supply shortfall, and it takes ages to set up a new mine if you want to. So even if the price does go up, it's going to take 10, 15 years for new miners to be planned, and then for new mines to be planned and then built. And then we have this long-term shortfall. And then a very important part of the market is the US and European utilities. They tend to have long-term contracts with the main miners. And currently the US currently the US actually has a shortfall. So they tend to have long, say 5, 10-year contracts where the price is fixed. And what's happened is, for whatever reason, the US and Europe haven't been committing to contracts in the last the last few years, and so they've now got a situation where they've got a bit of a guaranteed supply shortage here, so they're going to have to start generating new contracts to make sure that they've got a safe supply. And then obviously when these long-term contract bids come in, that should lead to some upside to the market. Yes, so the general argument for the uranium bull case, then, as we've seen, is that there's more reactors being built, more demand for uranium, and a supply shortage. Here's the share price of Yellowcake since they listed, and you can see the main events are that they bought £8 million of uranium. They then raised 33.9 million in a secondary share offering. They then bought another 1.2 million pounds of uranium. We then had this COVID crash, which didn't affect them as much as many stocks, and it recovered quite quickly. And then they actually then sold Okay, so their net asset value has been a discount of the actual asset value of the whole company by at least 20% for most of 2020. And so because of this, in July, they sold 0.3 million pounds of uranium to then effect a 10 million share buyback. And one other piece of news is they did a location swap where they swapped ownership of some of their uranium in Europe with some of their uranium in Canada, and then managed to earn £1 million from that. It's pretty insignificant in terms of their overall scheme of things, but still a newsworthy item. So I've overlaid the uranium spot price against the Yellowcake share price, and we see that there is actually a fairly good correlation. So this means that it is actually working, as a way to directly invest into the uranium spot price. Here I've got the uranium spot price against the purchases that Yellowcake have performed, and you can see they actually bought the majority of their uranium down at these lower prices, sub $25, and they actually sold when they did sell a portion. It was at the it was at the recent highs. So you've got to hand it to them. They're kind of good traders, and that was just quite interesting to point out. So when I look at their books, it's obviously extremely simple. They actually do include as income the appreciation of their uranium assets. But really, overall, this is all pretty insignificant. What really matters is the net asset worth of the uranium they have in terms of their overall share price. And the one thing that is of interest in their profit and loss is their cost attrition, because the majority of their assets are, as you can see in these bar charts, just the uranium they have stored. But we do have to think, well, how much does it cost for them just to run? Now, they only actually have two full-time employees, a CEO and a CFO, but then they do have like a board, which take a bit of money, but then they outsource most of the work. But obviously what they do is fairly simple. They just buy uranium, have it stored, and all those activities are outsourced. But anyway, we can see that there was quite a lot of costs when they first set up, but I guess that's understandable. They were buying a lot of uranium and stuff. And then they've settled down to a 1% cost attrition. And most of this is just their listing, their buying of equities, or their selling of equity, and their kind of procurement of uranium. And then when you look at the other operating expenses, here we see, I mean, those amount to about 0.5%, it's 0.7%. And we see that the management salaries and directors' fees are about 600,000. So I don't really like that. And this is at the kind of upper levels of my acceptance, really. These are other just running costs like the professional fees. But the fact is, they've got like a burn rate of about about 1% now. If you look at it overall, their cost attrition. So that means if you want them as a pure commodity play, you've got to consider that their assets. Let's say the assets stayed the same over 10 years because of that 1% loss per year. You've lost 10% of the value of those overall assets just through their running costs. So it is kind of low. It's kind of acceptable at the moment to me, but it's something to definitely keep an eye on. And then looking at their assets, and of course, all their assets are just simply the uranium they have stored. Their current assets, are very minimal. And there's practically no debt apart from this strange uranium derivatives. And when I looked into it, that was related to their purchase of Kazatomprom. Apparently, they negotiated a price below the spot price, but then that then meant there was some complicated thing where Kazatomprom could buy back 25% if they wanted, if the price went up. And so they seem to be hedging against that. So it's a bit of a complication, but it kind of does play out as not that significant in the overall scheme of things. And yeah, and then when I look at their assets overall, you can see here that from 2019, so this yellow line here is the money they raised with their IPO, and you can see the assets have increased since then with the spot price, and in 2020 it's increased even more. And then this higher line here, that includes their secondary share offering. Now, looking at the equity, and what's been great about looking at Yellowcake is they're so simple in how their books are structured that it means it's been very useful for me to help me understand the equity concepts, in particular the share premium and retained earnings. So this equity assessments was where I really was struggling the most. And of course, the reason I'm doing these videos is to make me put the work in. And then over the course of the year, I have been learning more and more. And it was a bit of a breakthrough for me because their equity situation is so simple and easy to understand. I've learned loads about equity generally from doing this assessment, so that's great. Okay, so the share premium is how their shares are valued, i.e. the share price times the total number of shares in issue. And when they IPO'd, they bought 241 millions worth of uranium oxide, and so then that gave their share price a certain worth, and so this is their share price. It's the value of their shares times the number of shares that have been issued. And then, of course, they issued 34 millions worth of shares in 2019. And so that's why we see the increase from 192 to 224 million in share premium. It's because they had a secondary offering. And so now, at the current share price, the shares of that company are currently valued at 224 million. So that's fairly simple to understand. That the share premium here is just the value of all their shares, and those shares have that value because of the known assets that the company owns. And then retained earnings is where in a given year the company has made money. Now that money is then normally stored, so it could be bonds or just in a bank account. Those then go in as retained earnings, and this gets considered in the overall equity of the company. And we can see in this lovely simplistic template that Yellowcake offers that the retained earnings here, I mean, they were 30 million and then it was up to 42 million. Well, when we look at the profit and loss here, the operating profit in 2019 was 30 million, and then in 2020 another 12 million, so that is 42 million in total. So you can see here how the retained earnings is simply the money they made in each year added to the equity. And actually that money, that retained earnings, it came from simply from the appreciation of their uranium assets. So it's been great to have this very simple structure that's then helped me understand what these terms within equity really mean. Finally, they did a share buyback, and that's why we have a -1 here by selling those treasury shares on the market, and then that will be a 0, and then they'll have cash. To summarize, Yellowcake allows you to kind of directly invest in uranium spot price, so it allowed you to make a commodities investment. And we've seen their bull case that future supply shortages will then lead to a big boost in the uranium spot price. So I wanted to obviously, as ever, go and look into that and test this theory. And I looked at International Energy Outlook 2017, which is a OECD document. We can see that there is projected to be an increase overall in the number of nuclear reactors in the world, most of the growth being in China and in the US. Okay, and I also took a look at the World Nuclear Association. There's actually so much transparency around the nuclear industry. It's really quite impressive, and there's so much information that I could easily obtain, which is fairly good information to help make my assessments. This was good. But you can see on this website they show the current amount of uranium required, and the current the power of the current reactors, plus all the reactors under construction and planned. And so from this, it is quite clear that there is a 20% increase in nuclear energy generation going up to 2040. And I actually tabulated the data from that website to make this graph and test it out. And this data corroborated the data on all the investor presentations. It's quite clear that generally, while Europe is slightly decreasing in its uranium requirements, the US is flat, and China is going up enormously, and the rest of the world is going up. It's quite interesting that whilst the EU is hurting itself by going down the route of more expensive energy, the other countries are going full ahead and catching up with us there. If you go on to Wikipedia, you can see the general trends. So in Germany, for example, they're shutting down all their reactors, and apparently their energy is tripling. So all the poor people in Germany are paying 3 times much more electricity bills because of whatever agenda the politicians have. And then if you look, though, some countries like Finland, for example, they're actually building new ones. So it's a bit of a mixed, and they apparently want to have 60% nuclear. So it's a bit of a mixed story in Europe, but overall in Europe it's dropping, whereas in the US it's going to be about flat. And then, of course, if you look at China, they're building loads of nuclear reactors. So the main important point anyway is that there's definitely going to be slight increase in demand of uranium worldwide, and it's quite clear that the uranium sector is going to be a growth sector. So I then checked out energy consumption, and I did this using the YCA.org website. And it's interesting. We see that in countries like the US and Western countries, there's actually going to be a slight decrease in overall electricity needs. But what's interesting is solar and wind, it's just a pathetic contribution for all of the government propaganda. It's a pathetic contribution. And we're still burning loads of coal and loads of oil. If you look at Germany, look, loads of coal, loads of oil, and apparently I read that they're going to have to be burning loads more coal because their nuclear is going to be going away. But then if you look at a developing country like China, wow, you can see the massive increase in energy needs. You can see how much more these countries are polluting the world, and yet at the same time in Europe, we've got like 3 times high electricity costs because of divestment in nuclear. You can see here clearly why China want to invest heavily in nuclear to lower all this pollution from coal. And then worldwide, you can clearly see that there's significant increase in energy needs. And because of all the coal that's been burnt and oil that's been burnt, it's quite, this data checking I'm doing certainly backs up what the uranium advocates are saying. So everything played out so far, but one thing that I noticed that was always played down was the subject matter of uranium inventory. And this I then looked into. So every year there's a demand of, let's say, 70,000 tons of uranium. And currently mining supply is only 5/7 of that. And 2/7 comes in from secondary supply. Now, this is from recycling of used fuel, the reprocessing of military grade uranium, and then each country has its civil stockpiles. And so what's been happening is, rather than buy from the miners, they've been dipping into their own civil stockpiles. So that also contributes to secondary supply. So first of all, looking into the recycling of used fuel. First of all, looking into the recycling of used fuel. When I looked into it at the World Nuclear Association website, actually that's only quite a minor contribution every year. And even up to 2035, it will only be about 2,000 tons of uranium. So very, not even half a barrel. And then when I looked at the reprocessing of military grade warheads into uranium to be fed into the reactors as MOX fuel, again, that's also a small contribution. So according to this fairly reasonable website, actually the contribution from military grade reprocessing and spent fuel is only going to be half a barrel of these 7 yellow barrels here. So not really a worry. And then I was looking into it a bit more. This overall, all these would actually be the total amount of uranium you could actually get from all the military weapons, as far as I interpreted the data. But actually, the military want to conserve most ones that I have, and I looked into that a bit more, and what I found is that although, say, in 1986 there were 70,000 nuclear warheads in the world, as of 2019 there's only 3,750. So we seem to be at the lower end of this reprocessing event. And so, throughout the years, there's been a bit of reprocessing nuclear warheads, and but that, if anything, it doesn't look like so much of a danger of that happening moving forward. We see that China have only got about 300 warheads, when US or China have got well over 1,000. So that makes you then start to worry about the civil stockpile of China, because they've got 12 times the amount of uranium as they need to use in a year. So then you start to wonder, well, are they actually building up their nuclear weapons stockpile? And of course, if they are, then they won't be using it for nuclear fuel in reactors. But anyway, overall, investigation into these secondary supply sources of recycling used fuel and reprocessing military grade fuel, it really does bear out that it's only half a barrel here, according to my data. So we're not so concerned of that becoming a problem. But then let's look at the civil stockpiles. Now, actually, although Russia is a bit of a mystery, it does seem that they actually have a fairly small stockpile, and they're probably only using, and they probably have 6 times their yearly requirement. So that's not too much of a drag on expected supplies. The rest of Asia currently have 7 times the annual requirements, which seems fairly reasonable. And apparently, a lot of those are from Japan. So Japan used to be the second largest user of nuclear energy, and then when Fukushima happened, they just shut down most of their reactors. However, they're now having an energy crisis, and it's their official policy to restart a lot of their reactors. And so some of this excess in rest of Asia is that excess is the civil stockpile of Japan, but that's obviously going to be needed again now as they start restarting all their reactors. So then China have a very large stockpile, and I actually then looked a bit more into the situation in China, and it seems that actually they are okay. So the Chinese mining situation is fairly modest. They are trying to mine as much as they can, but it only looks like they're in danger of producing 2,000 tons of uranium, which really is, a quarter of what they're going to need, particularly when you start looking forward. So this large stockpile, it does kind of make sense against their relative inability to mine it themselves, and then their long-term serious planned increases in the amount of reactors they're going to build. And China do regard it as a strategically important stockpile, and they like to dominate the market, obviously, in all kinds of other commodities as well. So it's not really an alarming issue, this large stockpile, but then at the same time, you've got to factor it in as a risk to supply shortages, because technically they could flood the market if they wanted to. But then when we come to the civil stockpiles in the US and Europe, we find that incredibly, whilst the strategic competitors around the world have been building up larger stockpiles, in Europe and the US, we've got a stockpile that's just been completely shrinking. We currently only have enough to last a couple of years, maybe 3 years max. We're using 4 of these 9 barrels, you see, every year. So here we see a big supply crunch. That for me is quite convincing. It does actually tally with what the proponents have been saying, that we're in for a supply crunch the next few years. So overall, from checking out the inventory, it certainly didn't skittle the investment case. I found the Europe and US situation very compelling, but then in the overall scheme, we've got to factor in the large China stockpile. So overall, I found this a very interesting look into the uranium commodity markets, and decided that I am going to make a investment into this, but I consider it not part of my equity investments, but as a direct commodity investment, so I can diversify my portfolio a bit. So the strategy is that this is the direct ownership of uranium as a commodity for your investment portfolio, and this is based on the presented uranium bull case. So the plan is to hold long term, 5 to 10 plus years, and we're looking out obviously for, in the future, a big spike in the uranium spot price. And really it's considered like a asymmetrical bet, because you can only lose half your value reasonably in the next 5 to 10 years, but there is scope for tremendous upside. So the plan is to purchase now, and I can give a disclaimer that I have actually purchased. In terms of the financials, the only thing to look out for is to keep an eye on the cost attrition, and then take the business somewhere else, to some other ETF or something if they start getting a bit too big on their bonuses, and then sell on a price spike, and then in the long term obviously reassess. And if this investment model, and particularly the supply chain model we have here, starts to fail in any way on continuous assessment, then that would be time to move out as well. So as main risks, one would be another Fukushima, of course. If that happens, the price is going to just come crashing down. So you've got to consider that, in your risk profile. Are you prepared to take that risk? Then there's running cost attrition, as I've already mentioned, and then unexpected supply in the market. It could be unknown China or Russia stockpiles or mines. And then obviously there's things like atomic weapons recycling and new technology, but I kind of de-risk that. But the new technology could be bad because, for example, with the old fast breeder reactors, those use significantly less uranium. It seems that most of the reactors that are being built are actually going to be pressurized water reactors. But all the same, there is a risk that new technology would then mean that less uranium would be needed for each plant. And then if there's an unexpected demand drop in market, so for example, a breakthrough in solar or nuclear fusion or something, but I consider that a very low risk. So I find this a very interesting commodities market, and I've been quite happy to invest in it. And I'm looking forward to reading the updates and seeing how this commodity market develops. And you can look at the Yellow Cake updates. They do kind of quarterly updates. And in here, you get a good narrative of what's going on in the commodities market. So I'm quite pleased to have diversified my portfolio with a commodities investment. So I've decided that I'm going to directly invest into uranium commodity through Yellow Cake.